Hey, good morning, everybody. It's Brian. Hope you're doing well today. It is Thursday, the 6th of August. Here for just a quick live update. Going to run through things that are happening in the market today, what to watch for, and also just talk about some trade ideas, some I don't want to say recommendations because I don't really care what you do. Other than I want you to follow a plan and I want you to have a consistent way of managing the market. But I'm not in any position to recommend anything. So let's pop over to this screen over here. We do have some news coming up. This morning we had the Challenger job cuts report came out. Showed what we saw yesterday. Yesterday we had the precursor to non-farm payroll. So we had the ADP report that came out yesterday. Showed that we lost a crap ton of jobs. And this morning's report came out and showed us kind of a similar thing, that job cuts have increased 500%. So we'll have unemployment claims coming out here in about 30 minutes. I would expect that to be up too. And then FOMC member Kaplan's going to tell us how great everything is, I guess, ahead of tomorrow's news, which is the non-farm payroll. This is the official non-farm payroll employment report and unemployment rate report comes out tomorrow. Of course, you may have seen Trump's tweet yesterday that the employment numbers were going to be great. So I don't know if you guys heard that. I just had a tornado siren going off over here. It's kind of weird. So Trump's trying to front run the numbers. I don't know, man. I think they're going to be bad. I don't know how they possibly could be getting any better, just based on what obviously I don't travel that much right now because we can't go anywhere, but just what I've seen in the travels out to, Florida. Was it last week I was in Florida? Yeah, I guess it was. And what I see here locally, I can't imagine that anything would be great. As he put it, it's I think the other shoe is about to drop, but that's my personal opinion and really doesn't have any place for what we're doing here. We need to be trading based on what we see on the charts, not on personal opinion. However, personal opinion is going to come into it. We're not total robots, but if you are trading on opinion, make sure that you're really positioning yourself appropriately with smaller lot sizing and taking smaller risk on that. We need to be putting our attention on a proper trading plan, something that's got quantifiable data, quantifiable reasons behind it for why we're actually making entries. Just because we think something's going to happen, again, like we've said before a number of times, we can apply all the logic we want to the market, but the market, and this is a Keynes quote, John Maynard Keynes, the market can be irrational for much longer than we can be solvent. And if anything's proven to be true, and just look at the run on the S&P, it's ridiculous in the face of increasing unemployment, no jobs, money being drained out of everyone's savings right now. You've got small businesses that have folded and probably won't come back anytime soon. It's going to get worse before it gets better. But we're just seeing this parabolic, face melting rally, out there. But so we need to go. That's the direction the train's moving. The train's moving up. Like I've said before, go with the train. You can have your opinions, and we can all have our opinions on what we think the market's going to do, and we can place those small bets if we want to on the counter trend trades. But reality is the market's going a certain direction. The train's moving. And if you don't want to get run over, the best thing to do is run alongside that train and jump on, as opposed to, keep jumping in front of it, hoping it's going to stop, because you're going to get run over more times than it's going to stop and reverse at that specific point. So again, have a plan. It's okay to have a plan that's a counter trend plan, but understand the risks and be prepared to bail out if it doesn't work out for you. So with that said, that's enough of my soapbox about it. Let's trade with a plan, and let's look at what that plan might be. So we're still a few minutes before the U.S. forex session opens. Even though, and with that said, there is news coming up. It's listed as medium impact, but I feel like it could have a wider impact today than just medium. So be aware, we do have unemployment claims here in the U.S. Coming up in about 30 minutes. So you may want to sit on your hands until we get through that unemployment report and then see if there's opportunity. So what we'll be watching for is divergence. Like right now, we're seeing nice divergence between the Canadian and the yen. So the CAD yen is seeing nice divergence here, where the CAD's moving to the weaker side, the yen is moving to the stronger side. And actually, you know, if we look at that on the CAD yen, it's only moved 40 pips for the day, although its average is about 60. So, you know, is there opportunity for it to continue on as it is, especially given the fact that we've got news that could be impactful. It is a U.S. report, you know, not necessarily a CAD report or a yen report, but the U.S. news does send ripple effects through to other currencies, you know, at a much larger rate than it would be if we had CAD news. You know, will be impactful to the U.S., but not as impactful as the U.S. news could be on the CAD or the yen or other currencies out there. So I feel like really the best course of action for really everything right now is to wait until after we get through that news period. Which, you know, obviously for the futures market, I don't look at anything there until after we get into that 9:30 Eastern time frame when the U.S. stock market opens and we get into regular trading hours. But for forex, that's already begun. But I would recommend waiting on this until we get through that report and see what direction the market is you know, kind of taking things post news event. All right, so, you know, but when you are ready to look, watch for divergence here. There aren't that many currency pairings that have moved only a fraction of their typical range, or a small enough fraction of their range that would make it interesting. I mean, a lot of the more volatile pairs have already moved at a range that's pretty close to what they might average for the day anyway. So unless it's a reversal type play, it'd be tough to kind of take a trend continuation there. But even with that, you know, watch for what we're seeing over here. You know, load your currency strength meter and, you know, watch for currencies that actually have some momentum to them. And we're going to look for currencies that are being heavily bought and pair those with currencies that have, you know, are being heavily sold off. And when we get that divergence, that allows us to say, hey, we've got this currency pairing that's actually, you know, got activity, and then go to your charts, you know, double check what the range is, where you are in that range, and see what the volume details tell you. Are we seeing trade volume that is flowing in a way that entices additional selling, or are we seeing trade volume that's flowing in a way that entices additional or continued buying? Right, so, you know, watch for, you know, where we are on trade volume, watch your trade range, and then of course, you know, have a look at what's occurring here. But right out of the gate, I don't have any trade recommendations on forex. And it'll be the same tomorrow as well. Tomorrow is actually a great day not to be in the markets in forex with the volatility around non-farm payroll. So there we have it. Moving on over here to the futures market. What's happening over here? Well, you know, the S&P, like I mentioned, the train's moving. The train is continuing to move, you know, in a upward bias. So we've got a long bias on the 4-hour. 30-minute bias is still a long bias, although, you know, we can see our price is currently moving down and testing this level over here of the 100 moving average, which at the same time happens to be testing 3,300, which is a key level for us on the 4-hour period. So it could be an interesting area. You know, we're looking at a long currency bias on both the 4-hour and the 30-minute, and retesting this 3,300. This could certainly be an area to buy off of. Now, a lot of that will be contingent upon what's occurring with you know, what comes out, how the market reacts. I shouldn't say what comes out, how the market reacts to the employment data that we've seen already this morning. So when we get under the live session, how do we react to that? The other piece that's kind of hanging out there that we don't know yet is what this next stimulus bill is. Are we going to get a next stimulus bill? If we do, what does that look like? How much money does that inject back into the economy so we can buy a bunch of crap we don't need? Because if you I don't know if you guys follow, a buddy of mine forwarded me a report the other day that Texas sales tax, for July hit like an all-time high, higher than last year. It broke records. It's crazy. And we're trying to dig in and figure out what it was, because everything else is down. There's no travel. All the airlines are down. The hotels are down. The events down. Imports are down. Oil production's down. Everything's down. So what led to it? People buying shit they don't. People buying crap they don't need. So bicycle sales, RV sales, camper sales, motorcycle sales. It's all the car sales. People got the stimulus check. They're getting more money on their unemployment. They're getting additional money, and they're just out spending it. So anyway, maybe this next stimulus bill does more of that. I don't know. Just dig us a deeper hole. But whatever. Just makes me crazy. Anyway, so with that said, that some news around that could push this up. Vaccine news, coming out with some good news about we've got a cure. That could we're about due for one of those big news announcements too, which could drive things up. So the big thing here is we've got a key level of 3,300 that we're retesting right now, and as long as our 30-minute stays the green line stays above the red line, as long as our short-term moving average is above the longer-term moving average, we're still in a long-term a long bias, a buying bias. So we would look for buy opportunities. So certainly buying off of 3,300 would not be a bad idea. Of course, wait until the news hits and see how the market reacts to it. If we start to break down on this and the market starts to sell off, obviously at that point we'll be in a conflict between our 30-minute bias and our 4-hour bias, and that would just say, hey, take your hands off the wheel and don't do anything until things fall into alignment again with a new directional bias. All right, crude continuing to move higher yesterday, just continuing to move up. However, it reversed pretty significantly midday. I think that was after some oil news. Anyway, long and short of that is the bias in the 4-hour is still long. The bias in the 30-minute right now is still long. However, we're kind of at a decision point on this as well. If this breaks down off of 42 and starts to move lower, this will cross over, and our 30-minute bias will conflict with the 4-hour bias. And so right now we've really got to kind of watch. The big number to watch is 42. That's where we're hanging right now. It was a resistance point, then it became a support level. It's broken. It's back to a resistance point here. Breaks above 42 would be in the direction that the 4-hour bias is, and currently would agree with the 30-minute bias as well. However, it won't take much for this to roll over, and if this flips, if the short-term moving average crosses under the longer-term moving average here, that would give us a conflicting bias between these two. And again, conflicting bias tells us to stay put, don't do anything, don't worry about it. But right now, 42 would be the position to look at for potential long trades. So like we've got 3,300 here that we seem to be bouncing off of. 42 would be that one here. Of course, with any of these, ideas or potential ideas out here, always trade with the stop loss and make sure you're managing your risk appropriately. You don't want to blow the whole account on a single trade. We need to be, it's all about singles, hitting singles daily, right? Gold continues to rip higher, and so we're in a long bias on gold. Tough to jump in up here. At the top of this, we certainly want to see it pull back a little bit before we were able to get back in. So areas to pull back to would be back to this 2060, 2050 area on gold. But we are still in a long bias on gold. But I wouldn't really do anything with this until we were able to get it at a little more of a discount for right now. So anyway, there you have it. As far as how to, where would we look, how to place your stop loss on any of these, there's a couple of ways to go. I've talked about before utilizing bottoms of previous candles. You could use key levels here, or just use an average trade range. So depending on what time frame you're trading, you can add an ATR to your chart. So if you wanted to add a study, we could go over here and add the average range, and you'd want to kind of look at it during the time that you're trading. But if you're trading like, let's say the ES, and you're looking at it midday here, you kind of want to watch from this 8 to 10. Where's your average range? And it's about 6. About 6 points is the average range there. So you could get away with a 5 or 6 point stop loss on that. If you were looking at crude, though, it would be different. So using average range for getting an idea of where your stop loss placement might be is I feel like something that you can. Where was my train of thought? Just totally left the station. Using an ATR when you're trying to figure out what your stop loss placement might be is a good way to go, because it becomes unique to the instrument that you're trading, as opposed to just using a static number. I hear a lot of guys in forex, like, oh, I'm going to use 20 pip stop. Okay, that's great, but 20 pips on the, I don't know, Aussie versus the yen is very different from 20 pips on the Aussie versus the pound, or the pound odd, right? One is significantly more volatile than the other. 20 pips on the Aussie yen is like a third of its typical range. 20 pips on the pound Aussie is like a fifth. So just using an arbitrary number like that, some static number, I feel like is doing you a disjustice. I mean, if you're trading futures, for example, 5 points on the S&P, 6 points, is kind of what the average range is on a 30-minute chart during the time of day that we would typically trade, the most active time of day. But 5 points on the NASDAQ is nothing. It would blow through that in a second, especially on a 30-minute chart. So, utilizing that ATR, looking at it during the time frame that you're trading on the instrument that you're trading, will help you dial in what your potential stop loss area could be. And at least it's based on something that's quantifiable, something that's based on quantifiable and unique to that instrument. If you're just picking an arbitrary number, sure, you might have success with it. It's fine. I mean, I guess it's just as good as anything else. But one has a little more math and reason behind it based on that instrument, whereas the other is just a number out of the hat or a number out of the air. So anyway, just wanted to throw that out there for a quick look. I haven't talked about crypto in a while. I didn't even look at it this morning. What is going on in the crypto land over here? Let's see if we can pull that up. Let's go to this chart. We'll take this off. Why isn't my chart doing anything? Whoop. There we go. And let's go over here to crypto and see what is happening. So on Bitcoin, continuing to, let's take this off. There we go. So Bitcoin, we've still got long bias, although it has flattened out. So we pushed well above 10,000, which was kind of a big level for us. But now we're starting to see it kind of flatten out here. Just a bit over the last 2 days or so. So we've pushed above 11.6, and our next stop up here would be 12. Certainly could look for reversals off of that. But if we're trading with the trend, the spot to be would be to watch for a pullback around here to 11.6, even down to 11.2 as potential pullbacks to continue that longer move. On this one, let's see if we put ETH on here. On ETH, kind of the same deal. Just go back out to a wider time frame. Upward trend, so we're still in a long trend. We're hitting the head over here on 400. 300 was a big key level, which it's blown right through. And so if we're looking for potential entries, we probably want to see it float back a little bit. Coming back down to this 350, 360 area. Of course, we are in still a long bias, so if we do break through 400, that could be a potential spot to look to continue to accumulate more. But I'd probably look for more reversals off of this 400 than I would for continued accumulation. I'd wait for it to pull back a little bit to accumulate on the cryptocurrencies right now. So I think that's it. We've hit everything. We've run through it. We've talked about some key levels on the S&P. We've talked about key levels to watch on gold, on crude. Gold is we'd want it to pull back. Gold. So if we're looking for a pullback, I didn't really talk about pullback levels on gold, but maybe I did 2060 to 2050 would be where we'd want to see it pull back to in order to try to find an entry there. S&P and crude both are hanging at key levels, 3,300 for the S&P, crude's 42. So we need to kind of see what the market does post news and how the market's reacting in order to get a good idea of that. I would expect, especially if we get some sell-off in S&P that's driven by fear about jobs and returning of jobs and future of overall state of things, we might see oil sell off with it, just simply because that could be an indicator that we're not going to be using oil. Oil has rallied because we've cut back production so significantly, but that also translates to jobs, that people aren't buying goods and services, are not buying the crap that's being sold. So anyway, but the big looming piece is, well, obviously the jobs information, but also, what's happening with the stimulus package that could be coming out. That's one of those things that could just throw a monkey wrench right in it. That's where we could see something hit, news announcement come out around it, and then have the market just react, and we don't know which way it's going to go, but react around it. So, again, just stressing the importance of always having limited risk on the table, and having protection points in there so that if it does move against you, you're able to bail out without taking too big of a hit, too big of a hurt. All right, so that's it for me for now. I'll let you guys go. We've got news coming up in 15 minutes, so we'll see what that has to allow. Talk to you soon.